Hello guys, welcome to the first video of the Silk Trader, and in this video I'm going to be discussing about the basics of the stock market. So what is the stock market? Stock market is basically a place where the companies can come and list their shares and we can buy and sell them. It is an exchange. In India, the main two exchanges are NSE National Stock Exchange and BSE Bombay Stock Exchange. Now let's talk about the market contributors. The market consists of the government, central banks, corporation, institutional traders, retail traders, brokers, market makers. Now let's talk about them in details. The banks buy and sell the shares of the companies. The government has their own shares. The prime minister and the president both have their own shares in the share market. The next is domestic institutional investors. They are the big AMCs, asset management companies and the mutual fund companies. Next is domestic retail investors. The retail traders are common traders like you and me. We are known as retail traders. Next is foreign institutional investors. They are basically the foreign companies that come to our country and invest in the shares of companies here. They see some potential in the shares of the companies in which they invest. नाउ लेट्स टॉक अबाउट बेयर्स एंड बुल्स. आपने बेयर्स एंड बुल्स के बारे में तो सुना ही होगा मार्केट में. सो बुल्स का काम होता है मार्केट को ऊपर ले जाना. बुल्स चाहते हैं कि मार्केट में एक अप ट्रेंड फॉलो होए और वो उसमें मार्केट ऊपर जाए. बेयर्स का काम होता है मार्केट को नीचे लाना. वो चाहते हैं कि मार्केट एक डाउन ट्रेंड फॉलो करे और मार्केट गिरे. Let's talk about the different market trends. So basically there are three market trends are known as uptrend, sideways and downtrend. In uptrend, the market is bullish and the market is continuously going up, making higher highs, and then in the sideways the market is not making any big moves and is just sideways going, not making big moves. And in the downtrend the market is bullish and it is coming down and making lower highs. Now let's talk about the types of position. Long means that you are bullish on a share and you are buying it so that the price will go up and you can take your profits. And if you are shorting a trade, it is also known as short selling. It means that you have a bearish view on the stock and that its price will fall in the coming period. So first you sell at a higher price and then when the price is lower you can buy it at a lower price and make money. Now let's talk about what is a candlestick. So we have seen candlestick chart, so let me explain you what is a candlestick. So basically this is the wick of the candle and this hole is the body. And in candlestick there are four main things you need to know: OHLC, open, high, low, close. So a bullish candle is the candle in which the price goes up and bearish candle is the candle in which the price comes down. So a bullish candle opens from a bullish candle's opening is here and the price goes up and it closes here and it makes a high and it closes here, and the low of a bullish candle is here. So as you can see that the closing price is higher than the opening price, so it is a green candle and it is a bullish candle because the price has gone up. And as we can see the same opposite with the bearish candle, it opened at a higher price and its high was also at a higher price. It opened at a higher price and then it closed at a lower level. So the candle is red and it is bearish. Now let's talk about the main three market segments which we have. So the first is equity. Normal buying and selling of shares of companies directly is known as equity. Futures and options are the derivatives in which we can trade, and commodities are when we trade commodities like crude oil, gold, silver, etc. Now let's talk about what we need to know before entering the market. So the main and the first point is knowledge. If you are entering in the market without any knowledge, then it is the biggest mistake you are making. First you need to gather some knowledge and then only enter in the market. And then you need a demat account so that you can buy and sell shares, smartphone so that you can control your terminal, and a stable net connection. Now let's talk about the risk associated with the market. I agree that the market is a little bit risky, but everything is risky. For example, I open a business today and for a month I earn good money from it, but after a month the business starts making losses. So the risk associated is there in the business also. If I start a job, there is no guaranteed job security in any job, so there is a risk associated in that also. You are driving on the road, risk associated in that also. So stock market is a little bit risky, and your risk management is mastered, then there is no need to worry before entering the stock market. That's it from my side. If you liked the video, please make sure to give it a thumbs up and subscribe to the channel, and thanks for watching.